The stock market took a big tumble yesterday. The Sensex dropped over 1100 points, dipping below 73,000. Even though it recovered slightly by closing time, it still ended the day down a significant 906 points. The Nifty 50 also fell by 338 points. Moreover, the small cap index saw its worst day since December 2022, plummeting over 5%. Mid caps were in far behind, losing more than 4%, while micro caps and SME stock indices fell around 6% each. Now let's delve into the main reasons behind the significant decline we have witnessed. Concerns mounted over rich valuations in the mid-cap and small-cap stocks. Since last month, SEBI has been asking mutual funds to implement safeguards to protect investors who buy small-cap and mid-cap stocks through mutual funds. SEBI is worried about a potential bubble in small and mid-cap stocks. Moreover, SEBI chief raised concerns by commenting on the off-the-charts valuations and lack of fundamental support. This suggests they believe the prices were inflated and could not be justified by the company's fundamentals. On the back of this, ICICI Prudential has temporarily suspended new subscriptions for small and mid-cap focus funds. Inflation in the US rose slightly in February 2024, reaching 3.2%. This is further away from the Fed's target of 2% and even farther from the long-term goal. The unexpected rise in US inflation has sparked fears of delayed interest cut rates by the Federal Reserve, potentially impacting foreign investments in emerging markets like India. India's February retail inflation remained stagnant, and January's industrial production data was weaker than anticipated, adding to the market's bearish sentiment. There's also something called the March effect. March is historically a time when stock prices tend to go down because of selling pressure. As the financial year comes to a close in a few weeks, investors are making adjustments to their portfolios for tax purposes. This includes profit booking and loss harvesting, which are common practices during March. Along with these factors, regulatory actions by RBI and SEBI and the absence of fresh market-driving factors are also adding to the jitters on the street. Overall, it's difficult to pinpoint a single cause for a choppy stock market. There were many reasons that played a role in the recent stock market decline. Investors became cautious and started selling their holdings, leading to a correction. Now that we're in the thick of it, it's best to stick with good old investment principles. Focus on the quality companies whose fundamentals are appropriate to current macroeconomic conditions. Be diversified, adjust your risk levels, and etc. etc. With this, we will just sail through the uncertainties. Also remember, the India growth story is still very intact. Having said that, this is Aditi Priya signing off.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com